Got breaking news here in just 30 seconds. CPI and core CPI. We'll keep those tabs loaded up here. So we'll come back to this as we get the numbers. So about 18 seconds. Again, not trading the spike, as that is a very, very risky way to play the news. We are purely going to be looking reactionary. We're going to be looking for setups post spike, as where I think that's where you can find some better setups. So here it goes. News coming in. Gold up. Dollar yen down. S&P 500 popped for a second there. Now there goes gold. Dollar down big. Possible cooling inflation numbers out. Let's go see what they have to say. Look at that. Gold is flying. That is not bad for the position. Yeah, look at that. So we are floating a nice profit there, up about 900 at this point, and back in the green suddenly for the day. Very cool to see that. Let's go see what's going on with the news numbers. So we just had 0.4% on core. Interesting there. But then we had headline 4.9% compared to the forecast at 5%. We are officially in the fours for headline CPI. Month over month stayed unchanged, whereas we had core CPI remain stubborn at 0.4%. What does that mean for markets? Well, let's go take a look at see what's going on. Well, the S&P is up. We have a shoot up to 41.35 for the S&P. We've got to take a look at dollar yen. Look at that, selling off hard here. Dollar bulls having a tough time today, as this one just completely just fell out of the floor. We've got gold trading just under 2040. Again, good for the position. We'll take that one here. So that's better than if I was taken out for break even, though. You know, you guys who are regulars on the channel, you know I've been taken out for break even many times on news events. That's just how it goes sometimes. So a good pop there. We'll see if it can last. That's the question, right? Because a lot of times you get these events and then they sort of erase themselves shortly after. This is a little bit interesting because you have some numbers here that are a little bit mixed, right? You've got core CPI month over month coming out 0.4%. Now, what is that telling us? Well, that's telling us that excluding gas and food prices, you know, inflation remained relatively unmoved. However, headline inflation, CPI year over year, continues to come down at slightly faster than expected pace at 4.9%. So what that could be is perhaps, you know, we've talked about oil a lot on the charts. And in fact, let's go take a quick look and see if oil is impacted by this at all. Oil, right, popping up here, 73, you know, big move here to the upside here this morning off of this CPI number. And oil has been sort of, and it's been an interesting one, right? Because in April, you sort of had elevated prices that followed through to the downside. But then here in, you know, May, we've seen prices come down quite a bit. Now, this, of course, has a big impact on inflation, and perhaps we'll talk a little bit more about that with Ivan here in just a moment.
8cap and A1 Trading are teaming up to give out free copies of the EdgeFinder. 8cap is an incredible, award-winning regulated broker looking to give traders the best experience possible. You can trade all of your favorite things like gold, forex pairs, cryptos, indices, and more. 8cap is our favorite choice when it comes to brokers, so go try them out if you're looking for a better broker. The only thing better than trading with 8cap is using the EdgeFinder to find better trading entries while trading with 8cap, of course. So to get your free copy of the EdgeFinder, all you have to do is create a trading account with 8cap and deposit $1,000 or more. Again, just deposit $1,000 or more into your personal trading account with 8cap. Message us when you're finished and we'll get you set up with your free EdgeFinder access. Happy trading, everyone.
Our savior. He's going to have all the answers and everything is going to be easy now that Mr. Eivindfx has arrived. Ivan, help me. Why? Why is this happening? EXY going down hard. I get you on the headline CPI, right? Headline CPI came out 4.9%. That's better than expected. We were expected to go flat. Oil prices were elevated. You know, this was unexpected by the markets. But this one is what's getting me. Core has remained so sticky, it even went higher than expected. So do you have any insights for us, or should I just go to bed?
Yeah, go to bed so I can take over. Now, I saw core as expected. As expected, 5.5. versus a consensus 5.5. So that was kind of like but so what core didn't do was it didn't go higher than expected or much higher than expected. So it's more like what it didn't do. We are still on the path, we're still on a trend line to lower CPI, which basically the whole market has basically just dived into, and they're all expecting lower CPI, and sure, they got it for the headline. Now it's still lower, right? We are at 4.
Okay.
We're now at 4.9. So it's
Ivan,
like,
sorry to cut you off.
Trying.
Core was expected year over. I'm looking at the month over month. That might be what I'm missing. Do you have in front of you the core CPI year over year? That's what I'm probably not seeing. We had a little bit of volatility, but you're saying it sort of was on target. I haven't seen that number. That's probably what I'm missing, and maybe I need to switch off Forex Factory for that reason. Okay, so what have you got here? Zoom in for us. What are we looking at?
So that is headline year over year 4.9, month over month is 4.4 as expected. Same thing with core 4.4, which is still double as much as we should be, but still. And this is what I'm talking about. Core year over year 5.5.
Now it makes sense. Okay. So I was thrown off by the month over month number, whereas what you're pointing out is that core year over year actually came out nothing too surprising. It made sense. That helps a lot and actually clarifies a lot. So thank you for that, Ivan. This is why we bring you on.
Secondly, as Brandon says, and my eyes didn't see it first, last month it was 5.6, now it's 5.5. So we are going lower. And the same thing with last month, it was 5% on headline, now it's 4.9.
Awesome. Yes. So in both camps, we have some good news in terms of inflation coming down. It's got a long ways to go, but yeah, that's actually pretty good. So cool. Thank you for explaining that, Ivan. That actually was very helpful. Sometimes, as you know, when you're on camera like this and there's a million things buzzing, sometimes it's hard to collect your thoughts. So it's nice to have you as the partner on the channel to come on and do this. Guys, let's just thank Ivan really quick because of his help here and showing up and working through his internet problems. Can you guys make sure to go subscribe to Ivan? He has his own YouTube channel. Again, he's a great guy to follow along with. He's also one of our coaches within the Discord channel. He does an amazing job there, and he does coaching webinars. He works with traders, and you can actually even go one-on-one, as I just did. He just taught me something. So, you know, what I learned today is don't use Forex Factory. It doesn't have everything you need sometimes. So thank you for that, Ivan. And yes, guys, go subscribe, check him out, and show some love to Ivan the Conqueror. That's what we should call you. So, Ivan, what else are you watching? Charts, setups?
Yeah.
What are you thinking?
I just want to explain to Mark, why is DXY in the crapper then? That's the exact reason. Yeah, that's the exact reason what you would have, because stronger dollar equals, or higher interest rate equals higher dollar, because we as traders get more paid to hold the dollar. Now with this lower CPI, which is driving interest rates, when this interest rate, with the inflation being lower, that will be lower interest rates down the line. That would be lower dollar.
Yes. So, yes, exactly. Yes. So dollar. You know, also to add on to that, Mark, and anybody else who's a bit confused by this, I'll show you something here that might be interesting to you as well. The S&P 500 here, as well as the NASDAQ, which both of these are reflective of risk-on assets, right? Think about the stock market. People tend to buy the stock market when things are optimistic, when things have better outlook. So what we like to call that is a risk-on asset. So a risk-on asset means people are willing to put risk on the table. That's the way I think about it, right? So when we're talking about this move here today, it makes actually good sense now that Ivan helped us out with the year-over-year concept. What we're seeing is that inflation is retreating, and if inflation retreats, that's giving the stock market more optimism that things are going to get at some point under control, and that there's that possibility for a softer than expected landing. I wouldn't go so far as saying, oh, that's what's going to happen, but it's improving the odds, the probabilities, and that's why the market is reacting very positively and sending risk on assets to the upside here today. We also mentioned another risk on asset is oil, and oil is also trading up today. So we're seeing some of the risky assets catch a bid here off of this relatively good news for inflation numbers. So very interesting to see this reaction. And again, I think that this has a lot of potential to turn into something bigger now that we're actually seeing inflation, really continue to move in the right direction. It could be interesting. So, Evan, what else are you watching here today?
Of course, the breach higher on Australian dollar. I honestly thought earlier they were setting up for a bearishness. I was like, this one, let's see if we should go lower today. And hey, we're making a higher high. So yep. I guess we are back to bullish again then. So
yeah, no.
Yeah.
I was just going to say that the Australian dollar, to the point that we just discussed, catching a strong rally here today. It goes along that same concept of risk on assets. As we know, when comparing the Australian dollar versus the US dollar, clearly the US dollar is more of the quote unquote safe haven currency of the two. We'll see if that gets challenged with all the BRICS nation stuff and of course the debt ceiling concerns, but whatever. The point is today, the Australian dollar is looking more attractive off of the idea that, again, inflationary pressures could cause some relief in the markets, giving some bid to some of the higher risk currencies. So, yeah, very, very interesting there. You've got Euro pulled up. What's your thoughts there?
In as much as this makes us sell the dollar, Euro is, I'm just pointing it out, somebody said, I think it was Yusuf said, you should look at your dollar. This is the least technical good trade to the upside that I can pull out because it's a range now. So yes, this might lead to more dollar weakness and euro go higher and all of that, but I would rather look at pullbacks on Australian, look at pullback on pound and pullback on New Zealand dollar against the dollar more than the euro dollar until we break 111. Because I hate ranges, and ranges has one thing in common. For me, it is a Forex account killer.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.